reaching and growing beyond the 100 million mark is not a destination, it's a step. We're very much focused on the next milestone for our business, which is reaching the 200 million plus AUM.
Hello, you're watching Proactive. EMV Capital's released its full year 2025 results this morning with more. I'm joined by CEO Dr Ilian Iliev. Ilian, very good to speak with you. You delivered revenue growth, reduced losses significantly, and you also increased assets under management during what's been a difficult period for venture capital markets. How did you achieve this, and what do you think this says about the resilience of the platform and the model you've built?
Stephen, thank you very much. And just to be explicit, we've reached revenues of roughly just over 3 million for what we call the core of our platform, which is the operating model of the venture capital firm, which when we took over as a management team back in 2020, it was zero. So, of course, we feel quite good about that. But in addition to that, AUM has increased further to 112 million pounds, a 15% increase on last year. But also, as part of our results, we are seeing the venture build side of our portfolio starting to deliver some significant returns in terms of on paper. We're quite pleased with the progress that the company has made. As to your question, how have we been able to achieve this in times of a difficult market? Look, the way we see it is in such circumstances, at times of such a great displacement in the market, an enormous amount of opportunities are opened up. So our venture build program is able to exploit those by capturing really good opportunities and developing them further. But at the same time, we also have exposure to a great portfolio of companies in Cambridge and elsewhere through the rest of our fund management practice, many of which are exposed in some of the most interesting areas of growth today around energy efficiency, around AI, around data centers. So it's the combination of the different aspects of our business model that enable us to capture and exploit opportunities in a difficult environment. And we're pleased to see that is now reflected in the results.
You talk about EMVC becoming increasingly differentiated through active portfolio management and scalable fee-generating activities. Why is that combination important in the current market environment?
I think over the last few years, with the downturn in the VC markets, there has been a lot of disappointment in LPs about how the traditional venture capital model is working. Of course, venture capital is not going away anywhere. It's an incredibly powerful mechanism for financing innovation and creating shareholder value and generating shareholder and investor returns. What we are seeing is that LPs are looking for differentiated business models that combine elements of the traditional VC model with an evergreen and so on. As far as EMV Capital is concerned, we have this combination of both an evergreen vehicle with an underlying fund management infrastructure where we are managing funds, combined with the PLC aspect that we are able to access the markets when needed. And underneath that, what we have built now over several years, and it is now providing some results, is the combination of our corporate finance practice and fund management practice, which is the money aspect and the managing of the money and understanding how to structure businesses in a more capital efficient way, with the implementation side, which is around the proactive management of the portfolio, and our value creation services side, where we are able to intervene, in particular in the venture build side of our portfolio to drive value. And it's this combination of several tools underneath one platform that we believe is making EMV Capital an attractive opportunity.
And then your language seems more positive about the sector. So after a prolonged period of caution across venture capital markets, are you now starting to see investor appetite return, particularly for deep tech and life sciences businesses? And if so, what are they most interested in?
So look, I think we're seeing several things. First of all, our philosophy is always to lean in rather than backwards, even in a time of adversity. So we look for the opportunities and we look for the interesting areas. I can answer the question in two ways. One is around the different stages of investment, where what money is. And I think, despite all the doom and gloom around the UK remains a great place to start businesses and to access early stage capital. This is partly through the EIS tax efficient investment ecosystem, where we have a thriving investment practice, but also there remain a critical mass of venture savvy investors in the UK. So the early stage is quite strong in the UK. What we are seeing now is for specific markets of interest, the later stages are also starting to become quite strong. The Series B, Series D, Series Ds in our areas of focus in deep tech and life sciences. There remains a weakness around the Series A investments, but the way we deal with it in our portfolio is that by restructuring the business plans of the businesses, making them more capital efficient, more modest in their objectives, more modest cash burns. That means that the companies can wait out longer until they hit Series A readiness. So that's in terms of the stages of investment, if you will, aspect of the VC ecosystem. On the other side, there is what is hot, if you will. And here, deep tech within that, semiconductors, anything to do with data centers, and of course AI, as well as defense dual-use technologies, is in a good place right now. Certain areas of life sciences and healthcare, in particular around digital health, are also strong. And across our portfolio of 70 companies, we have multiple portfolio companies that are benefiting from these tailwinds. It's not smooth sailing. There are difficulties, of course, but the pure economics of the sectors are driving interest, which we believe will help the portfolio as a whole.
You mentioned several portfolio companies approaching important commercial, technical, and also regulatory milestones. What are the key catalysts investors should be watching across the portfolio over the next 12 months, and which companies in particular should we be focusing on?
So part of what we have done over the last year on the investor relations side at POC level is by listening to our investors, opened up more opportunities for them to learn directly by the companies. We have a series of virtual meet the portfolio sessions where our investors can log in and watch those and see the CEOs of the companies present their businesses. And this is to help our investors understand the specific companies, the value inflection points that they're driving towards, and and what success looks like for those businesses. So the reason I'm saying that is that given the diversity of sectors we focused in, there are differences between what success means for a semiconductors company versus a pharma company. But to give a few examples, AMR Bio, for instance, which bought out the assets of Destiny Pharma last year, they're working very hard towards an FDA phase 3 application, and having a positive outcome with the FDA in terms of the design of their clinical trial. That's a significant value inflection point for them that enables them to go to the next point. With Sofant, our satellite communications company, of course, space tech is very popular now and a great area of focus of investors for all sorts of reasons. And the UK itself is a great source of space tech technologies. So Sofant, in particular, has been making good progress around their technology platform and working with OEMs. Again, what's the key milestone there? Well, first sales absolutely are a massive milestone for them. Deep Tech Recycling, who are looking to launch a first project or first pilot plant with their plastic waste to oil technology, are seeing even more interest now in the context of the Iran conflict that has seen not only the volatility in oil prices, but also the strategic importance of diversifying supply for the transport industry as well as the chemicals industry. So they're absolutely in the right place right now. Again, the inflection point there is the launch of a first product. So but it's too much to track for any one investor, and this is why the combination of the virtual meet the portfolio events that we host, as well as more communications via LinkedIn, so that people can track what's happening in the companies over and above the RNSs, is, I hope, providing sufficient information to our followers to understand what's happening under the hood.
Yeah, you say you're increasing exposure to digital infrastructure solutions and energy efficiency across the portfolio. Can you tell us what's driving that focus and why you see these areas as particularly attractive opportunities?
Elsewhere, I talked about a full stack approach towards the data center and AI opportunity. And I think the UK is in a very good place to benefit from that. Of course, we have very high energy costs, which, as the media has covered prolifically, is a headwind rather than a tailwind. But besides that, there is a critical mass of capabilities here in the UK. A lot of it in areas, the geographic areas where we're active, that is critical for the global data center and AI capability. It has to do with the future of compute. It has to do with the emerging technologies around quantum computing that will be a lot more efficient than current computing technologies, energy storage around providing resilience of data centers, energy efficiency, and so on and so forth. So there is a lot of IP-intensive hardware that's being developed in the UK, or where the IP is in the UK, that is incredibly relevant for the future of data centers and therefore for the future of AI. So from that perspective, both because of our existing portfolio focus in some of those technologies and also things that we're looking at in the future, we feel that's a really interesting area for at least for a few years to come.
Any closing thoughts on the year ahead, Ilian, and what your broader priorities are?
So look, I mean, for us, reaching and growing beyond the 100 million mark is not a destination, it's a step. We're very much focused on the next milestone for our business, which is reaching the 200 million plus AUM. That itself is a step in a certain direction and not a destination. Our business is quite resilient. The investments we've made in years past in processes, in our team, in our platform, are paying off. So we're feeling quite optimistic for the future. We're not blind to the challenges in the macroeconomy and global political economy, but with the people and process infrastructure and investor ecosystem that we have, we feel we're quite well positioned to weather the storm and to focus on great opportunities. And finally, I think not only us, but the VC platforms that emerge from this current period stronger will be in a really good position to grow further when the markets inevitably turn in due course.
Ilian, I hope you'll continue to keep us updated with your progress. Thank you very much for your time today.
Thank you, Stephen.
That's EMV Capital CEO, Dr. Ilian Iliev.